How would you think a producer performed if I told you that they increased their base dividend by 25% and bumped up their share repurchase program by $500 million after reporting their Q3 results? Okay, now factor into that decision the fact that the CEO was fired at the end of September by the board. Sounds like a mixed bag, right? Yeah, that's kind of what Barrick Mining delivered to us for the third quarter, despite record operational and free cash flow. Let's dive in. Barrick Mining in the third quarter posted top-line revenue of $4.2 billion, which was a 23% improvement on a year-over-year basis from $3.4 billion and a 13% bump from the second quarter, which saw revenue of $3.7 billion. Despite the year-over-year and quarter-over-quarter improvement, the company failed to meet analyst expectations, which called for revenue of $4.3 billion. That revenue figure follows the sale of 837,000 ounces of gold, which was down 13% year-over-year from 967,000 ounces, but up from 770,000 ounces sequentially. The average realized gold price, however, made up for this drop in sales, with the average realized price growing from $24.94 an ounce in the third quarter of last year and $32.95 an ounce in Q2 to $34.57 an ounce in the most recent quarter. Copper, meanwhile, saw 52,000 tons sold in the third quarter, down from 54,000 tons in the second quarter, but up from 42,000 tons in the same quarter last year. The average realized price of copper, meanwhile, was rather flat, growing to $4.39 a pound versus $4.27 a pound in Q3 of 2024 and $4.36 a pound in the second quarter of this year. Moving down the income statement, net earnings for the third quarter totaled $1.3 billion, or 76 cents per share, an improvement of 170% from $483 million, or 28 cents per share in the third quarter last year, and from $811 million, or 47 cents per share in the second quarter of this year. On an adjusted basis, net earnings totaled $982 million, or 58 cents per share in the third quarter, as compared to $529 million, or 30 cents last year, and $800 million, or 47 cents per share last quarter. This also failed to meet analyst expectations, with estimates calling for adjusted EPS of 59 cents. Attributable EBITDA, meanwhile, grew 57% year-over-year from $1.3 billion to $2 billion flat, while EBITDA margins grew from 46% to 59%. And in terms of cash flow, net cash provided by operating activities was up 105% year-over-year and 82% quarter-over-quarter to a record of $2.4 billion, while free cash flow improved even more dramatically, rising 233% year-over-year and 274% quarter-over-quarter to $1.5 billion. Cash and cash equivalents, meanwhile, moved from $4.8 billion at the start of the quarter to $5 billion as of September 30th, leading Barrick to increase its net cash position from $73 million to $323 million. And given that cash position, Barrick, as we mentioned in the intro, has increased their base dividend by 25% to 12.5 cents per share, with a 17.5 cent dividend being declared for Q3. The company also repurchased $589 million in shares during the course of the third quarter, bringing year-to-date share buybacks to $1 billion. Well, the board authorized a further $500 million in buybacks under the current program, which expires in February of 2026. While Barrick was busy talking about record cash flows, the item they sidestepped was the production data, at least on a year-over-year basis. The opening line of the earnings release commented Q3 gold production 4% higher than Q2 at 829,000 ounces, copper production in line with plan at 55,000 tons. And well, the reason that figures were compared to the second quarter is because production was actually down year-over-year, substantially. Barrick in the third quarter saw production decline 12% from 943,000 ounces. Regionally, the shortfall was a result of production crashing in Africa and the Middle East, dropping from 355,000 ounces in the year-ago period to 220 in Q3 of this year. Elsewhere, production was actually up in both North America from 415,000 ounces to 429, and in Latin America and Asian Pacific, where production rose from 173,000 ounces to 180,000 ounces, meaning the loss of the Mali operations had a substantial impact on the company's production profile. Copper production performed better, with the segment producing 55,000 tons versus 48,000 tons in the year-ago period, a 15% improvement. However, copper production was down quarter-over-quarter from 59,000 tons in Q2. In terms of costing, gold total cash cost rose 3% year over year, moving from $11.04 to $11.37 an ounce. However, cash costs were down 8% from the second quarter. All-in sustaining costs, meanwhile, were up 2% year over year, from $15.07 to $15.38 an ounce, but down 9% quarter over quarter. The copper segment, meanwhile, saw C1 cash costs retreat 21% year over year from $2.49 to $1.96 a pound, but were up from $1.80 a pound in Q2. While copper all-in sustaining costs declined 12% from $3.57 to $3.14 a pound on a year-over-year basis, while climbing from $2.90 a pound in Q2. As for the current outlook, full year 2025 guidance remains unchanged. Gold production is currently guided to be between 3.2 and 3.5 million ounces, which Barrick says is tracking in the lower half of the range, with year-to-date production of 2.4 million ounces. Copper production, meanwhile, is estimated at 200 to 230,000 tons, with year-to-date production sitting at 158,000 tons, meaning Barrick is also on track to meet this estimate. And in terms of costing, gold cost of sales is slated to be between $14.60 to $15.60 per ounce, with total cash costs between $10.50 and $11.30 an ounce, and AISC between $14.60 and $15.60 an ounce. Exactly zero of those estimates are on a path to being met. Year-to-date, gold cost of sales sits at $16.13 an ounce. Total cash costs sits at $11.97 an ounce, and AISC sits at $16.60 an ounce. But that guidance was set at $2,400 an ounce gold. So Barrick says that their guidance estimates need to see $50 an ounce added to reflect the current gold price and the impact on royalties. But the company still isn't in range for meeting those targets either. Copper pricing, meanwhile, calls for cost of sales of $2.50 to $2.80 a pound, C1 cash costs of $1.80 to $2.10 per pound, and AISC of $2.80 to $3.10 per pound. This segment of the operation seems to have done a better job of cost containment, with cost of sales at $2.72 a pound, C1 cash costs of $2 a pound, and AISC of $3.03 a pound, all of which are in line with guidance. All right, so let's wrap it up. It's easy to say not much has changed post-Bristow. And while it feels like his departure was ages ago, the fact of the matter is that he left on September 29th and the quarter ended the next day. So this was still a Bristow quarter. And while the bulk of the year will still have occurred under his leadership, whether new management can turn things around here and get Barrick back on track remains to be seen. But they aren't off to a very good start, with 3 employee fatalities being reported in line with the release of these results. Moving forward, interim CEO Mark Hill says a performance review is occurring across the organization to see what can be done different, while putting a better emphasis on both safety and operational performance, 2 areas which have been lacking as of late. All right, everybody, thanks for watching. As always, if there's stories you want us to cover, let us know in the comment section. We have lots of earnings videos on our channel right now, so if you're looking for that, make sure to check out our channel. And if you want more mining content, check out our website over at thedeepdive.ca. All right, everybody, thank you for watching.